Good afternoon, everyone. Welcome to this ESS BIZTOOLS webinar for our subscribers. The great research opportunity that's available for proactive accounting firms. And I really believe that each of our subscribers is a proactive accounting firm. So let's look at what we're going to be looking at today. I think we need to start with the research and development incentive rebate, which we released to our subscribers, 95% of the material last week. And we will be updating a bit more material over the next 10 days or so. The Accelerating Commercialisation Grant, which has been part of the scene for the last 7 or 8 years, and the Early Stage Innovation Company, which the federal government introduced about 4 years ago. This is the trifecta of opportunities that are available for you to discuss with your clients. Your clients will be happy. They have got the opportunity of creating a significant tax rebate, 43.5% of their legitimate research and development expenditure. An accelerating commercialization grant, which could be as high as $1 million. And the opportunity of being accepted as qualifying as an early stage innovation company, which makes them very attractive to investors, especially sophisticated investors. So let's just go through this journey and see what it all means to you. Research and development. I think there is a tremendous opportunity for accountancy firms to be able to be very proactive in offering these services to clients, because across the complete board of accountancy firms all over Australia, there is a lot of research and development activities taking place. Oz Industry and the Tax Office have reported that over 13,000 companies are participating in the research and development projects. And I think that's going to grow following the COVID-19 lockdowns and working it from home, and no football matches on. And in some places, no bars open, no cafes open. A lot of people will have been tinkering, developing concepts, developing ideas. And a lot of them could be your clients. This is your opportunity to talk to them, to promote to them, to run some webinars and seminars to inform them of what all this is about. So let's go through research and development. They must be a company. Someone rang me yesterday and was talking about early stage innovation companies, and then told me that the proponent was going to undertake major research and development. In fact, the estimated cost was $350,000. And I said, well, the first thing you've got to do, if they're not already ready in a corporate structure, you need to get them into a corporate structure. Because once they're in that, they're able to claim the benefits of research and development. The legitimate research and development expenditure must exceed $20,000 in a financial year. Now, all this starts with an idea. I said before, they may have been tinkering, and they need to research whether there's prior art or prior literature. This is the terminology that the legislation uses, but we need to be aware of it, that this needs to be done. And it's basically searches on the internet and talking to some experts and trying to find out whether someone has already invented this product, because your client's not going to be able to invent something that they're going to make money out of if someone has already done so. It's important that they record the results of their searches, because they may be subject to a tax audit, but that might be anywhere between 1 and 4 years' time. So they need to have a record of what testing and checking that they did. And obviously they need to decide whether this is going to be a worthwhile project. Is it something worth putting in 100, 200, 500 hours of their time and perhaps their team's time? Do they think they're going to be able to get a reasonable return on their investment? So this is what income could be generated from this idea. What's their vision? What do they think is going to happen? And what will this research cost? And they then need to identify what the core research items are. Now, within the product package, which you've now got access to, we do describe what these terms mean. Pardon me. And they need to determine the hypotheses or an individual hypothesis. And this is basically a statement that they then set out to prove either true or false. And please remember, even though they might not be able to prove their research, they can still claim that expenditure as long as they've gone through the process in a systematic manner. And that's what the legislation requires. They need to seek input from experts. They might be professionals, scientists, experts in their field, people from universities, and they need to document them. They need to identify the team that's going to be involved. And it might be some of their own employees, but it could be some external people as well. And they need to submit a report to the board of directors to get their approval, which identifies the research that's been undertaken to determine whether someone else has already invented this product or developed a service, or they are able to find out something about the product, what it's going to cost, what the return on investment might be. So the full report goes to the board. And when the board approves this, they're ready to commence their research activities. They need to record details of the experiments. They've identified core objectives. They've identified hypotheses that they need to now prove or disprove. And the experiments are the functions that they need to undertake to prove or disprove those hypotheses. And they need to keep appropriate records. And we have the forms to facilitate all of this in our system. They need to record team members' time, because the labor cost is normally the biggest single outlay that the business is going to incur relative to research and development. So team members should be completing timesheets, signing the timesheets, whereby they are certifying that they have undertaken a research and development assignment on a particular day, and they spent a period of time on it, which they've identified. And all other costs need to be recorded. So if the company has hired external consultants or external contractors to do any of the work on this research and development project, they obviously should be submitting tax invoices. And on the tax invoices, they should be clearly identifying which research and development project they worked on, what the task code was, so that what work they've done can clearly be identified, and how many hours and what that cost. And there needs to be a registration form submitted to Oz Industry at the end of the year. In fact, 10 months after the end of the year, normally the 30th of April, whereby every project's listed and details of the work that's been undertaken in the previous 12 months is identified. And you've got forms in the system to help you do that. And then the information that's needed to be shown in the tax return for the research and development claim, which you would be completing as the tax agents, then needs to be prepared, and a pro forma of that information is enclosed in the product package. Now, companies with turnovers under $20 million can claim the cost of the research and development, covering everything we've talked about, at 43.5%. And companies with turnovers over $20 million, the claim rate for this current financial year through to 30th of June 21 is 38%. There are changes happening from 1 July 21, and we will be preparing updates for you when that occurs. But this year we're worrying, at this stage, we're worrying about this year's recording. If the company's turnover is under $20 million per annum, and the company is trading at a loss, the company can elect to receive a cash refund for the research and development. So if the company spent $1 million on research and development, the company could get a refund of $435,000. Will definitely help cash flow, and it's money that many of these companies then reinvest into further research and development activities. So this is a great program for your clients. But what opportunities are there for accountants? So let's look at them. You can utilize the ESS BIZTOOLS Research and Development product package to establish a research and development recording system for your client. We have developed a white label version of the research and development product package, which when you sign a client on as being a client for research and development system advice, you can then download that white label version of the system onto their computer, because they are primarily responsible for the maintenance of the information. Mainly it's going to be recording of the time spent by their team and by consultants and by other people in the project. They also need to record the results of each experiment and monitor that. And they need to be going through the process that we've clearly summarized in the research and development system as to what they do with each new project as they identify it. So you are going to be able to earn them fees. How much? $3,000 to $5,000, I would have thought, for installation of the system. And then you should be checking the accuracy of the data during the year to see whether they're recording it properly so that the information is readily available at the end of the year to be submitted to the tax office and to Oz Industry, because there's two separate reports got to be prepared. One's the tax return, of course. So we've got the annual return, which has got to be lodged with Oz Industry, and preparing information for inclusion in the company's tax return. That work will vary. I suggest you should be charging on your normal professional fee charges for that, but it will be a few $1,000s. Some people charge a percentage of the research and development rebate that the client obtains, and some firms are charging 10% for that. It is up to you to decide how you're going to charge your fees. But this can be quite attractive for accountants who have taken the time to familiarize themselves with the process so that you can offer this service to your clients. And I should have mentioned before, if any of you have any questions that you would like to ask me, please type them into your computer and they will get sent through to me and I can look at them then. I'll just get back onto the system here in a minute. Okay, so let's move on. That's research and development. A fairly key summary of it. There's more information, of course, There's things like supporting research and development. There's feedstock adjustments. There's clawbacks. There's the whole system of deciding whether the company's got any new trade secrets or intellectual property that it wants to consider getting a patent for. That's all part of the process. But today we're really identifying what I think is some real opportunities for you as the accountant, especially if you can be thinking broadly on this trifecta of opportunities. Accelerating Commercialisation Grant. This grant's been around for about, I think I did the sums wrong there before. I think it's now been around for about 10 years. I was involved as a consultant to Oz Industry when this program started, because for 11 years, I was a consultant to the predecessor program, which was COMET, Commercialising Emerging Technology. And we kept on making submissions to Oz Industries that they needed to make more money available. In the COMET days, we had about a maximum of $200,000 per client, and that was basically to pay for reports to be prepared to get the client ready to be able to make investment pitches. It's all now changed. It's now to help on the commercialization process. Actually, I think it's a great program, and it applies to companies with turnovers from zero, so a complete startup can apply for this, through to $20 million. And what the financial assistance for is a grant, not a loan, a grant for the commercialization of the product. Because at the end of the research and development project, most companies have only got a template, or they got some calculations. They got the beginning of a computer program. They haven't finished it. And there's a lot of work to be done to get a new product into the marketplace. So this program is to assist. And there's a whole range of things. There might need to be some further work done on the prototype, because as the company starts to demonstrate the prototype to potential customers, they will get feedback. And that's one of the key protections that's available once a company applies for a provisional patent. They can then demonstrate. They start getting feedback on their demonstrations. They need to make changes. So those changes can be funded under this particular grant. And that includes salaries for directors who are working on the project and other key employees. And it also covers a whole range of other things. It might be fees payable to legal firms to draft terms of trade agreements and retention of title agreements and distributor agreements and appointment of agents, and a whole range of matters can be considered. It might be getting an expert to write a quality control system to be worked with the product. And it can be the development of a marketing plan, but not the implementation of the marketing plan. So there's a lot of things it's worth looking at if you've got clients. Incidentally, the funding is only for companies, but an individual or a partnership can apply for this grant on the understanding that if they are told that they're going to be offered a grant, they must immediately form a company, because the Commonwealth will only deal with companies in this particular grant, because they believe this is serious. The company is applying for a grant of up to $1 million, and it doesn't have to be $1 million, of course. It might only be a couple of $100,000. Is serious about developing a strong business. And the government's advisors believe that if you're serious about business, you need to be a company. It's as simple as that. So this project that they're starting with, the template, could be from the research and development activity. Difficult to work out where else it could have come from. So the grant's $1 million on a 50% funding basis, and the work must be able to be completed within 2 years. And the grant is paid in quarterly tranches. So as part of the application process, the company needs to submit, normally that will probably be your job. He needs to submit on the government's forms, on the forms designed by the Entrepreneurs Program, which is part of Oz Industry, a cash flow forecast. And if Oz Industry have approved the project by the Entrepreneurs Board, the cash flow will be determined and they will pay in advance each quarter. They do retain 15%, which they will pay out at the end. And as long as the work program and the expenditure program goes in accordance with the original budget, they will continue to make those payments every quarter. But if the company gets behind in making its payments, the government will also slow down their payments after the first quarter. So it's a great system. They're getting this money in advance. Incidentally, the company doesn't have to have its $1 million or $200,000 or whatever their 50% amounts to at the beginning of the project. But they must be able to satisfy the Entrepreneur Program business advisor, and there are 32 of them around Australia now, that they have got the ability to fund their share of the expenditure as that expenditure has to be paid. So that could be from cash flow out of another activity that the company already has. Remember, the turnover can be as high as $20 million. Or it could be from some sale of assets that the company's going to make. Or it could be from a new loan that the company's going to secure. Or it could be an injection of new shareholders' funds into the company. And we're going to be talking about that possibility shortly. Now let's look at the opportunities for accountants out of the Accelerating Commercialisation Grant. There's information within ESS BIZTOOLS which will assist you to be able to guide your clients on the preparation of the grant application. And the grant application is in 2 phases. It's a rather complicated grant application, and you will be involved for some time. And I think you've got to do both phases, even though you submit them separately, before you finalize it, because you need to make sure that all the answers have been assembled. The first phase is for the Entrepreneur Program through their business advisor to determine whether they think your client is eligible. And they can reject at that stage, normally because they don't think enough information's been supplied. And then they would then ask for the second phase of information to be supplied to them. In most cases, the company will be applying as part of the grant application for funding to prepare a business plan that can be utilized to raise capital under early stage innovation companies, which we're going to talk about in a moment, or crowdsource funding, equity raising, or Section 708 of the Corporations Act. Now, if you're proactively offering business advisory services, I think you're well in line to be able to obtain that appointment. Now, that does depend, of course. Your client may have someone on their board who's very capable of writing a business plan, but if they haven't, I'd suggest that you should be submitting a proposal that you can prepare that business plan. And the business plans are $20,000 to $40,000 documents when it comes to this grant. Project management of the grant funds. I've done this a couple of times together with the business plan, because there's a quarterly report that has to be submitted back to Oz Industry on how the project's going. Some clients don't like these arrangements that they've got to submit quarterly reports and are quite happy to delegate it, and you can charge a project management fee. for a project worth about $400,000. I think my fee was $20,000. That was approved by Oz Industry as being reasonable. So that's another area where you could be earning fees in the delivery of this project. I'm just going to check again. I haven't got any questions coming through. If you think of any questions that you want to ask me, please type them into your computer and I will look at them. We now come to early stage innovation companies. A bit of history. In December 2015, the Australian government released its innovation package. This was when Malcolm Turnbull was the Prime Minister, and those of you who have done some studying of the various Prime Ministers will know that Turnbull was one of the most enthusiastic Prime Ministers we have had on innovation. And that's where he made his own fortune from. And the government that he was leading at that stage announced via the Treasurer, Scott Morrison, that 2 new types of companies were going to be created. One was called crowdsource funding equity raising, and the other was an early stage innovation company. So they become stablemates in effect. They started going through Parliament together. They somehow or other got separated on the way through. Early stage innovation company legislation got passed about 6 months before crowdsource funding equity raising legislation was passed. And unfortunately, once these new types of companies are introduced, there doesn't seem to be much ongoing promotion from the government. It's then left up to practitioners like you and myself to make sure that their clients understand how this type of legislation can assist them. Now, the big thing about the early stage innovation companies is this was created by amendments to the Tax Act, whereas crowdsource funding equity raising was created by amendments to the Corporations Act. So let's go through and look at early stage innovation companies. Now, those of you who are gold subscribers have access to the ESS BIZTOOLS product package on early stage innovation companies, and also our silver subscribers. But if you are subscribing for other packages and you're interested in looking at the early stage innovation company package, please contact us. So it's basically targeted at a company structure that assists young companies to raise capital. And the operative word is young, because in most cases, it's 3 years and under. Although there are some exemptions, which I won't go through at present, but a company up to 6 years can be eligible in some instances. And that's all summarized in our material that you have. The company must have a turnover under $200,000 in the previous 12 months, but that does not include any grant money from the Accelerating Commercialisation grant. You can see the nexus that the government's created. They think a lot of the companies attempting to raise capital as an early stage innovation company will have come through the Accelerating Commercialisation grant program. They see this as a bit of a supply chain. The company started off in research and development. It got to a proof of concept stage and then went through getting grant funds to undertake the commercialization phase. And now they're ready to be wanting to raise capital. Or there might be a bit of blurring of that, in that they still might be in the accelerating commercialization and they're wanting to raise capital, and that can be arranged. There will be a preliminary approval that you can get from the Entrepreneurs Program, and they normally will allow 3 to 4 months while you are able to tie up the investors for an early stage innovation company. But more about that later. So the key thing is your client must have a turnover under $200,000, and expenditure in the previous 12 months on all types of items must be under $1 million. And obviously that's including capital expenditure. So expenditure under $1 million. And the company must pass one of two tests. So the first test is the gateway test. And in this, the company needs to accumulate 100 points. Now they can earn 75 points if more than 50% of the company's expenditure was on research and development that has been submitted as a research and development incentive rebate claim to the tax office. If the company has been admitted to the Accelerating Commercialisation Grant Program, what we've just been talking about, they earn 75 points. See this nexus between R&D, early stage innovation company, and accelerating commercialization and early stage innovation company. It's all linked in together. If they've been in an accelerator program, been admitted to that, they can earn 50 points. If they've already raised $50,000 from arm's length investors for ordinary shares in the company, they earn 50 points. And there's a couple of other activities that they can earn points, and they're summarized in the material, which you have as if you're a gold or silver subscriber. If you're interested in more details, please contact me. Now, if they miss out on getting the 100 points, don't fret, because many do. And then they move into what is called the principles test. The principle test's got 5 key questions relative to, is the company committed to developing this new product or service or marketing or management methodology into a viable business? Has this project got the ability to be able to be activated on a broader basis than just in the locality that it currently is? Can it be scaled up? Has it got commercial potential? These are the sort of, there's 5 questions. These are the key questions that are being asked. And you go through and answer those. Now, what happens next is the interesting one. The company will need a due diligence report that I'm suggesting you produce, and that's in the material that ESS BIZTOOLS has developed, that certifies that the company has qualified under these tests. Now, the gateway test, it's really black and white. Either the company has undertaken that research and development and has lodged its tax return, because that can all be proven. If the company's been admitted to the Accelerating Commercialisation Program, that can be proven. There's documentation. If shares have been issued, that's able to be proven with ASIC records and copies of share certificates and photocopies of financial receipts, information, etc. So the tax office view is there's no need for the company to submit any application for their approval that the company has qualified as an early stage innovation company. The company can, but the tax office are not encouraging it. And you would only do that if there was some real question and something wasn't black letter law. And if it's not black letter law, I don't think they're going to qualify under the gateway test. There does need to be information submitted to the ATO about the investment when the company's tax return has been submitted. But that's not the key point at this stage. The key point now is that documentation needs to be produced that can be submitted to potential investors, and we're coming to them shortly. The principles test, though, is different. There's 5 questions, and it seems to be that you need to supply, or the company needs to supply, at least an A4 page in response to each question. The company can supply far more if they wish as to how the company is going to go about implementing the answers that are required to those 5 questions. That information, together with the rest of the information that we've included in our package, should then be prepared, signed by the directors, and submitted to the tax office and Oz Industry for a ruling. The tax office are saying that they're getting these responses back in about 6 weeks. And if they've approved the company as being meeting the classification of a early stage innovation company, the company receives a letter from the tax office, which normally applies until the end of that financial year. But there will be a date shown within it. So that the company has then assembled all the information. Now, I'm talking about work being done here. I'm envisaging that you as the accountant are undertaking that work. That's the way the product package has been produced for you to be able to complete the forms and have the client sign them where required, so that you're able to then give to the client a complete file. That could be on a computer stick, or it could be printed out if you wish, that's got all the evidence, and the client is then able to have discussions with the potential investors. If you want to be involved in that, that's obviously your business, and you will have to make arrangements with your client. What we've developed is the material so that the due diligence report that investors will want to see can be tabled, because the investors want to make sure that they're going to receive their tax rebate. And you might say, what tax rebate? Well, I'm coming to that. So what's the investor benefits? For a sophisticated investor, they receive a tax credit calculated at 20% of their investment in this company at this stage, up to a maximum rebate of $200,000 off their tax bill. And if their tax bill currently is only $50,000, they carry forward the balance of $150,000 until a future year, when they will be able to offset it against their taxation bill. It's not too bad for them, is it? So a rebate, 20% up to a maximum of $200,000. Now, if the investor is a retail investor, the maximum that they can invest in the company is $50,000, no more. The government is wanting these investments to be spread and people not putting all their eggs in one basket. So the maximum tax rebate that a retail investor can obtain is $10,000. And the same thing applies. If they don't need it all in this first year, the balance carries forward. And then there's more, because for a sophisticated investor and a retail investor, so the total of them, they get a capital gains tax exemption on the sale of their shares, as long as they own those shares for longer than 12 months and less than 10 years. No capital gains tax. That could be a very significant amount of money that they've saved. And if they still own those shares at the end of 10 years, the company is in fact revalued. So if you're still the accountant, you'd probably be called upon to value the company based on what's happening. And that valuation, the component that the sophisticated and or retail shareholders that originally invested own in the company, would be the calculation for their new cost price for their shares in the company. Now, as far as I know, there's no similar treatment for investments in any other legislation in Australia. This is a great initiative by the government to assist a company that probably started at that research and development with an idea, and then potentially took it into accelerating commercialisation grant, and then has come to here to raise capital as an early stage innovation company. The company does not directly get anything out of this, but it's getting the investment money. The investors are the ones that are receiving Turnbull and Morrison realized that to get investors to invest in companies developing new technology and ideas and marketing and management philosophies in business, that they needed some encouragement, and that's the encouragement. I'm amazed at the number of people who don't know how this works, don't really know anything about it. It's there. Some of the crowdsourced funding intermediaries, because they are finance raising companies, will also assist in raising investors for these types of companies, because they have investors on their books who are saying to them, if you can find someone that's been approved as or qualifies under the gateway test or has got the taxation office approval letter under the principles test, we're interested in looking at them, seeing what their proposal is. So you could suggest to your clients that they talk to one of those intermediaries, and we've got details of who they are in the product package. So what's the opportunities for you out of all this? We've talked about what's in it for your client. They have been able to go to the market and may have raised $2 million. So you assist the company to determine their potential eligibility. Directors need to understand how this process works. It all takes time. And that's one thing that we're good at selling, isn't it? Time. And you would charge appropriately. And they potentially need assistance in preparing their own business plan, budgets and cash flow forecasts, because they're going to need that sort of documentation to be able to convince investors as to where this company is going to go. And then we move into the conducting the due diligence under the gateway test, preparing the documentation, completing the forms that we have created, and getting them signed by the directors, putting them into a package that you're confident that your client can then take that to whoever they're talking to, and perhaps sending those details through to one or more of the crowdsourced funding intermediaries who are actively raising money for early stage innovation companies. So that's more fees for you. And there is a fair bit more work involved in the principles test, because these questions need to be answered. There may be supporting evidence that's got to be submitted to some of the questions in the answers. And then all of the material, the due diligence material, needs to be assembled in the report, which you've got the templates within the product package that is within the ESS BIZTOOLS system. And that report then needs to be submitted to the tax office. And they then forward it on to AusIndustry, and they will come back with an approval or no approval as to the status of the company. Again, I envisage that you're the only one that should be talking to the tax office. I wouldn't have the client going off and talking to them. So you submit that to the ATO and have ongoing correspondence or telephone calls or whatever with them if need be. And there's more. You could assist the directors in understanding corporate governance, because part of this process of going to the market and raising, let's say, $2 million, they may find that the investors are saying, well, we want to put one or two more people on the board. And you may have decided to recommend to your client, the original directors, that they may need to brush up on their corporate governance skills and understanding of the normal way that company boards operate, especially if they're growing companies. So there could be some more fees in mentoring your clients on corporate governance, and all that material is within the ESS BizTools packages. And your client might require some assistance on company secretary duties. In fact, they may be very interested in talking to you about accepting the company secretary's role for them, because they may have 20 new shareholders. And the return of allotment of shares is going to be prepared to go to ASIC, and they're mindful that they need to raise their game a bit because they've got some new directors on their board. It might be a bit fussier on the way things are done than what they may have been doing in the past. Again, a fee-producing opportunity for you. And last but not least, in a fast-growing company, you may be able to talk to your client about appointing your firm as the virtual chief financial officer. Not many of them are really going to require a full-time CFO, but they're going to need to have a system that they're going to be generating regular reports for their board, financial reports, budgets and cash flow information, digging down into the results. This is a company that will need to have a strong hand on the controls as far as the financial matters are concerned. So this could be another great opportunity for your firm to help your client in this way and generate additional revenue for your firm. So ESS BizTools, as most of you know, contains product packages to assist you to supply all of this work. We look at these new possibilities in the marketplace, and we then sit down and develop product packages that can be delivered via the internet to you, that we can keep up to date by using the internet, that you can then deliver services to your clients. And we run these monthly webinar training programs to alert you. And many do not attend these, but we send links each month in our members alert so that those who are busy at present or at conferences or whatever can link on in their own time when it suits them to be able to watch this type of recording, so that we're giving you an insight that this opportunity exists. And the real challenge for you is to make sure your clients get this service. Otherwise, those clients who have started that research and development journey, if they don't think you're interested, they will literally be forced to go and talk to someone else. And just look at the opportunity that you're going to miss out on. An opportunity to keep a client happy, to have a very happy client, an opportunity to generate fees, and an opportunity to be creating very interesting work for your clients and your team. Interesting work for your team members, a variation from taxation work. So all this material is supplied within the gold package that our subscribers have, and also the silver package. I missed that out there, but the gold and silver package. And as I said earlier, if any of you are subscribing to one of our other packages and you now like to look at the packages that we've referred to today, please contact us. And for those that don't know, obviously that's the contact information. peter@essbiztools.com.au, or give me a phone, call. So thank you very much for being with us today. I hope that you've found this whole concept interesting, and that you are going to meet the challenge of supplying your clients a great research and development opportunity, which could flow through to a lot more activity for your clients and more professional services work for your firm. Thank you for your support of ESS BizTools. Have a great day. Goodbye. And thank you for being with us on this occasion. Goodbye.